Welcome to the third episode of Money Moves, our monthly series that dives into all things tokenization. And really, we just aim to make it easy to understand what the value is of bringing assets on-chain. I'm Social Ivory, Head of Growth Marketing for Institutions and Enterprise at Ava Labs. I'm joined here by my partner in crime, Morgan Kropetsky, who runs BD for Institutions and Capital Markets at Ava Labs. And then we have two amazing guests today. We're joined by Maredith Sapp, Director of Business Development, Digital Assets at WisdomTree, and Jason Guthrie, Head of Digital Assets Product at WisdomTree. Really excited to have you both here because I just think your insights will give us all some really good perspective on how the traditional finance and tokenization world is evolving and perhaps becoming one. But also maybe shedding some light on where there's more work to do and why this is so important.
Great.
So
thanks for having us.
Yeah, excited to have you here. So first off, we'll start with you, Maredith, and then we'll go to Jason. Two questions that we like to ask every guest on our show. And Morgan, I'm just going to call it a show from now on. What was your personal aha moment when you realized that you were interested in blockchain? And separately, how did you make your first dollar?
Sure, and I'll take the first dollar first because I think it leads into how I ended up in blockchain. But I think my first actual dollar was a lemonade stand. That's a throwback. I have two older brothers, and we had signs and the whole thing trying to track people down as they walked by, which was a fun childhood memory. But my first real paycheck was in high school. I worked at a pool, high school and college newspapers, retail stores, the typical early jobs, but always really gravitated towards the business side that led me to a career in finance. And then my aha moment was twofold, both for the technology and also for the asset class. So on the technology side, I worked at two of the largest financial institutions before joining WisdomTree last year. And I got to see a lot of the internal back-end processes and operations. And so many times I said to myself, this can't be the best way to do this. There has to be a more efficient way than faxes or emails or legacy systems that don't talk to each other. So I think it was 2017, a coworker of mine introduced me to blockchain technology. And I thought to myself, this is the answer I've been looking for on the ops side. And then a few years later, I started working with institutional and family office clients. And when they started asking about crypto as an asset class, I knew it was something I had to go into full time. And I truly believe this is how we're going to power the next generation of financial services to consumers.
I love that. I love how you went from lemonade stand to now having more access for everybody to these assets. That's a great story. And Jason, maybe you want to lead us off with that same question. How did you get involved in blockchain and how did you make your first dollar?
Yeah, sure. So I got involved in blockchain. Look, I used to be a big skeptic, right, particularly of Bitcoin. And I had a friend that was super into it. He's a cybersecurity guy, really into the technology side of things. And he kept badgering me about it. So to kind of prove him wrong, I went and read the Bitcoin white paper, found it super compelling. And then went all the way down the rabbit hole and sort of reoriented my career around doing it, and even ended up hiring the guy that sort of got me into it to start with. I concur with like pretty much everything Maredith said. I think like this is just such a powerful tool for making financial logistics better. I had very similar set of observations when I worked in banks, that like the way the technology bolted together just seemed so inefficient, that there must be a better way to kind of do this. And this technology is absolutely going to revolutionize it. Like it's just a force multiplier for financial logistics, which is going to be so powerful. I think that, we can just make a much better, more democratized financial services offering that puts the consumer back at the center of it. I don't think finance has had its internet moment yet, right? You might have a mobile app, you might fill a form in online that you used to do in a bank, but the business model is the same. We're going to have a complete opportunity to spin it on its head here, which I think is just going to benefit everybody. So I'm now just super, super excited about it. The question of my first dollar, my very first job was I had a paper route. But my first real sort of thing was I worked for my family business when I was in high school, which was a like swimming pool supply store, so local business.
You probably sent like fax invoices too back then.
Yeah, absolutely.
I guess maybe you saw Meredith on the side of the pool with a lemonade stand.
Other sides of the
Very, very
world.
complimentary.
But actually, I didn't know that about you, Jason. I feel like I just learned something. So we are more and more similar, I feel like, as every day passes.
Yep. Yeah, we're just merging into one person, Meredith.
Amazing. So let's dive right in. During Consensus, Jonathan Steinberg, CEO at WisdomTree, gave a fantastic presentation, and he was explaining us how WisdomTree has been exploring the use of blockchain. So maybe you can walk us through what prompted WisdomTree to start exploring the benefits of blockchain, essentially WisdomTree's aha moment, and maybe also, just for context, walk our audience through what WisdomTree is, what you guys do, and how you fit into the financial industry.
You want me to say this, Meredith?
Yeah, and I can add on.
Yeah, for sure. Okay, cool. So WisdomTree is the world's largest publicly traded ETF sponsor. We run $92 billion in asset management. We've been doing this business for about 15 years. We're still a founder-led company. You mentioned Jono in the presentation. He gave it Consensus. He's been at the helm the entire time. We are a very innovation-focused firm, right? Jono started the company to make ETFs to disrupt the asset management industry, right? ETFs have been like the overt winner in the space. It's a financial technology that just offered a better user experience than the mutual fund that came before. He believed that was the way of the future and sort of went all in on it. It's a very similar story about why we're into like blockchain now. Jono asked the question internally to our strategy group, like, what, I'm hearing about this blockchain, that we're hearing about tokenization. Is there a chance that this could disrupt our business? And if so, then we want to be the ones to disrupt it. The series of work streams that came off the back of that resulted in us saying, yeah, absolutely. This not only is this going to disrupt our portion of the asset management industry, this is very likely going to disrupt all of financial services. We absolutely should go and get involved. Our core competency as a business is doing wrapped exposures, right? So, how do we take investments, opportunities that are out there, put them inside an easy to use wrapper, and then market and educate? And that's sort of a muscle memory that we've built very successfully over the last 15 years. And we now want to apply this to tokenization. So, we're building out the ability to bring sort of existing exposures, asset classes, investment themes onto a blockchain native way, and then deliver them to clients in the most usable way possible, so that people have access to everything they need to live their entire financial lives inside a blockchain-enabled world.
And I would just add that specific question was, and I love this, was what can do to ETFs that ETFs did to mutual funds? So again, that innovation and thinking about what's next. And that's where we found tokenization and the blockchain, to Jason's point. And also, I would just add that there's really three main parallels to and pillars that we focus on. It's transparency, liquidity, and standardization. So I'm sure we're going to talk about this later on too, but especially with standardization, for this topic today, it's anyone with a smartphone can hold a token, versus in the ETF world, you need a brokerage account. So just that democratization is a huge opportunity that we see too, and liquidity, obviously, with faster settlement times and transparency, to have a clearer view of everything that's going on, we see as really big differentiators too. But again, it relates back to our experience as an ETF provider.
Yeah, it was very clear from that presentation that WisdomTree is having a really innovative approach to all these latest developments in the markets. So I guess it isn't the first time that tokenization is making headlines. It's been a hot topic for a while. I remember in 2017, it was also a topic that people were discussing, but it was really more of an idea rather than, something people were actually doing. So from your perspective, and maybe Meredith, you can chime in here first, what has caused this, let's call it a renaissance and revived interest of what tokenization from its previous popularity in 2017 to what it is today?
I love that term, renaissance. I definitely think it's technological advances. I also think mainstream adoption has really helped. I mean, think about now on CNBC, the price of Bitcoin is running on the page along with the S&P. That definitely wasn't happening, 5-6 years ago. But also the ability to scale for the masses to enable daily transactions, I think is huge. And I think from our perspective, there's also been an aha moment for us where people have realized we don't need to talk about the technology so much as we need to show that it just works better than what we have today. And that's what I'm really excited about.
Yeah, I think there's also an element of like these things take time. So you're right, it hit headlines 3-4 years ago, when it was a concept, and then people have gone off and built. I mean, that's exactly what we've done. We've had to go out and build the capabilities to tokenize these things, work out how we can operationalize them in a like risk managed way that meets the standards of the business that we do today. There's also the regulatory side of things. We spent years dealing with the SEC to get the blockchain enabled funds approved, but we've now got this. So the building blocks are all coming together, and it never quite moves as quick as you want. This stuff takes time, but now we're seeing the fruits of that work over the last 3 or 4 years, and it's great to see that people are paying attention again.
I'd be curious also to hear your guys' take, especially Jason, when you went through kind of the history of WisdomTree and how they really kind of drove forward the ETF industry. How you feel like tokenization can either revolutionize or disrupt or disentangle that industry in of itself, and how you guys kind of look at those things in tandem.
Yeah, so I think the big theme that you're going to see is disintermediation, right? For me, that doesn't mean no intermediaries, but we just will need less, right? And people will take up more of that value chain in a more efficient way. Right now, if you were to think about an average sort of investment transaction, just as an example, where you want to buy an S&P 500 ETF from your broker, the number of intermediaries moves that you go through, some of which you'll see, most of which you won't. It's this huge iceberg of people doing functions sort of under the surface, right? Between like the clearinghouse, the CSD, like people doing the settlements, the messaging on the quoting themselves. You've had to go through 4 people to just to get the message to the exchange, and there will be at least 3 custodians involved in the process, and everyone in there takes a clip, right? Nobody should go and work for free, but we can just make that much more efficient. So things are straight line, things are through, like the throughput can become much higher, and it can become a much more seamless activity. I think that financial services sort of element is really burdensome on the average person, and we can just make it much, much simpler.
I think we call that efficient intermediation.
I like that one. I'm going to start using it.
And actually on the back of that, I think it would be great if you guys can talk maybe in a little bit more kind of concrete terms. I know you guys have done a ton, obviously, on the WisdomTree Prime side, just a little bit more, concretely what you guys have built, what's out there, and kind of what's to come. I think it would help just for our audience to kind of get a sense. Like we always talk about, efficiency, cost savings, but like concretely, if you could give us an example, I think that would be helpful.
Sure. So we really focus on the public markets, so mainly treasuries for our first entree into real world asset tokenization. And with all the yield farming and earn types of programs we've seen over the past few years, we saw a need in the market for customers to invest in safer alternatives, but still with competitive yields. But more than just yields through tokenized products, we wanted a better experience. And that's what Jason was getting to about us really being innovators. So today, if you're like me, you have 5 or more financial apps, one to send your money to friends, one for your bank, one for your brokerage, one for your crypto, one for your credit card. And now people can invest in WisdomTree digital funds on their phone through WisdomTree Prime. So they can buy crypto, have cash, have their credit card connected, and also pay using any of those assets or send them to a friend in one place. So we're focused, again, going back to this theme of customer experience being better and blockchain powering that, but having it all in one super app, for lack of a better term. And I think it's actually a pretty cool term, but then also having all of those assets being tokenized within that app, which is really, really exciting.
Yeah, I think from just an efficiency of build perspective, we wouldn't have been able to get this stood up as quickly if we tried to do it in the traditional way on the old rails. So there's a speed to market efficiency and standardization piece with like the way we construct the infrastructure that sits behind WisdomTree Prime. On the front end, it should just feel like, a neobank to the end consumer. But under the hood, and the reason we could stand it up so quickly was because we built it on blockchain, which is just super, super powerful. But then beyond that, I think what consumers need is a better experience. So because we've done it in this way, right? Once you're in the blockchain-enabled ecosystem, you can move between any asset instantaneously. That means any of the cash you've got sitting around, you can park it in treasuries and pays you 4.5% versus your bank account where you'll be lucky to get 1 today. So we've now just put people way closer to that investing experience and increased their investment return by about 3.5% a year for sort of no cost. All of that then sits in treasury product, which is US government debt. So essentially, it's the credit risk of the US government versus like being in a bank. And we've seen everything blow up recently where you are just an unsecured creditor of your deposit bank. So if we can decouple those things and suddenly force the banks to become more consumer centric, employ better risk controls, and actually offer competitive interest rates, then hopefully we can drive a substantially more competitive financial services ecosystem.
Amazing. Yeah. So, I mean, it's clear that we definitely have made some really big steps here from 2017, where it was really more concept, to now having you guys come out with an actual app that's putting this all together. And you already kind of covered this, Jason and Meredith both, but maybe to simplify it and make it super easy, a question that I get a lot is, great, tokenization sounds great, but what are the challenges being addressed by tokenization today? Is there like a simple moms and pops version that you would answer that question with?
Jason, you want to start?
Yeah, I can. Look, it is always, I completely get the question. It is really easy to get bogged down in sort of like the technicalities of it. But like the thing that I always put to my team is like, how can we make this usable for my mum? Right. And I think the answer to this, like, what's the thing that it solves? It really is that like banks don't care about the customers. They just straight up and down don't. And I think, the ability to completely disrupt this system where they're not running a monopoly on it and they should care about their customers and have a consumer-centric business, that's what we're going to be able to drive from this. And I think that, everybody has to use financial services. Like it isn't optional. You need a bank account to get your paycheck paid into. You need a debit card to get a cup of coffee. You need to invest for your retirement. And everybody just takes for granted that you have to be their customer, that you have to work in there, that you're going to have to be involved in the system that they have a monopolistic position on. And I think if that changes, then everybody's life can get easier.
I completely agree. And I'd also add to the intermediaries point that Jason made before, also the elimination or consolidation of those is also going to make the end user experience better. But also just think about atomic settlement. So meaning instantaneous settlement, think about payments and how that could be made better too. And the evolution of some of those rails that I think with tokenization could just make the daily lives of everyone just a little bit better. And I think that's what we're really focused on as well.
I think one example that someone told me in terms of the WisdomTree Prime app, which I thought was really cool, was the ability to kind of have your fiat or your cash sitting in a treasury or money market fund earning yield, and then have the ability to literally pay for a cup of coffee with that position, where atomically in the background it just sells out of that and goes into fiat. Just like thinking about that tangibly, I just thought that example was super interesting, where, to your guys' point, like all of these things are potentially sitting in one kind of end-to-end app, and having your money kind of be put to work, but at the same time be able to use that as like a centralized place from which to spend. I always thought that was a cool illustrative example.
Absolutely. And it's treasuries. It could be gold. It could be Bitcoin or ETH. I mean, it's any asset that you can think of that's going to be available within our app. So yes, we agree, and think about also just the possibilities of sending gold to a friend for their birthday. That's a pretty cool one too.
Meredith, you're coming to my birthday party.
I'll be there.
Yeah, so I think, and it's super helpful, I think, just to take a step back and highlighting in simpler terms what, some of these concrete challenges are that we're solving with tokenization. And to your point, Jason, whether people are aware of it or not, they're already part of this financial system. So you might as well take a more proactive approach to it. So diving a little deeper into the developments that we're seeing today, I'm wondering, how do you see tokenization transforming traditional finance, and what implications does this have for institutions and end users?
So I think we covered this a little bit, but I think it's going to make TradFi more efficient and also more transparent, even to what Jason and Morgan were saying before, for counterparties in trade, but also more accessible for consumers. So think about products that were once only available for accredited investors could be open to retail investors through lower minimums or fractionalized shares that we started to see. So that's a good example of how that can definitely be a benefit. And then we mentioned Jono's, our CEO's talk last week at Consensus, but he also said that he thinks that all assets will be in a tokenized wrapper one day. And I completely agree with that. And that really enables the creation and transferability, but also management of all assets on chain. So I can see that really evolving to be the whole ecosystem is starting to be able to be on chain, which provides a lot of benefits as well.
Yeah, I mean, look, I don't think anybody has a crystal ball with this one as to exactly what the market will look like 10 years from now, but I am very convinced that it's going to be, there's going to just be some emerging business models that turn a couple of these workflows on their head. Like some predictions from me of like areas to kind of look at. I think decoupling like daily banking from like the fractional reserve lending system is an obvious place. Cross-border remittance is another like very obvious one that's going to get, I think, completely changed by tokenization. The amount of sort of extractive fees and things in that space is just crazy. I think there are a lot of institutional processes that are kind of ripe for more efficiency. Collateral management is one that I'm looking at that would benefit so hugely from the sort of native characteristics that tokenization bring, namely like T-instant settlement and 24/7 uptime. And then I also think that there is potential to have some really innovative business models as we bring in some of the like unique individual value that is related to financial services, but not an investment or money per se. So things like credit score, like your healthcare, like your employment benefits, like when we can start to again add the characteristics of tokenization, more transparency, more transferability, I think the way you could construct financial products around like lending or marketplaces for healthcare, things like this, will drive change through the industry as well.
Jason, one thing you mentioned that I always like to think about in terms of the collateral management piece, like when I was in TradFi, I'm sure you guys can kind of relate to this. When we would do trades with clients, because the premium didn't settle for like T+2 or T+3, we'd always have to charge what was called initial margin on the trades, which was like extra money on top of the trades to account for any risk that would happen in case the other counterparty like went bust in those 3 days. And if you think about the idea of just being able to enable atomic settlements and payments of premiums of trades, think about like all of the kind of trapped capital that can be therefore opened up just simply because of that concept.
Absolutely.
Yeah, absolutely. I think that trapped capital is one. Collateral management settlement is something. I mean, this just sort of this is an anecdote, and it speaks to like the ease of doing this. But like, I built a DVP settlement DApp over the weekend just to see if we could do it, and it took about 45 minutes and takes all the risk out of that process. Like these are solvable things that the old system and old technology just couldn't get right. And if we go back to first principles for a lot of these workflows, like these are all solvable things.
Great. Yeah. And Jason, both you and Meredith and Morgan, to that point, also have been in traditional finance for a long time. I'm wondering, how have you seen, from your perspective, how have you seen institutions prepare for tokenization, or how are they preparing for this transition?
So I'm happy to start here, and Jason can add in too. So the landscape's really far and wide for firms that are engaging in this space, and we're working with a range of firms. But I think there's two main themes that I've seen as institutions start to prepare for this. And the first one's definitely education. So that's where calls like this are great. So it's either understanding the basics of blockchain and tokenization, mainly that crypto is not the only use case, a lot of what we're talking about today, or it's understanding the mechanics and the use cases around how we can better enable trading, settlement, payments, a lot of what we just spoke about. But really, in each of these cases, I think all of us are trying to understand how we can make the interactions with our clients better. So whether that's a cost, a liquidity, or a timing. So Morgan, I think the example you gave was a great one. And also, how can we make our operations and processes better? Again, cost, time, and efficiencies. And then the holy grail is, how can we improve, or a lot of times rebuild, to Jason's DVP example, what we have today and what's the ideal end state? And I think a big one too, and this is something that Jason and I talk a lot about, is while everything can be tokenized, it doesn't need to be. So we're looking at the use cases that really drive value for both the institution and the end client, with our eye on how these incremental changes can add up to major transformations over time.
Yeah, I mean, I pretty much concur with all of that. The spectrum for institutions coming into the space is really wide. Some are more advanced and progressive than others, and some are still very, very resistant to the space and think it's a fad. But I think what we see with a lot of them, look, everything in the institutional space takes a long time, right? There's a lot of bureaucracy. Compliance teams are very big. The technology teams are spread very thin. And so this stuff, it's still going to take time for it to come, but there are some green shoots and some progressive companies, and I think we'll see some more and more interesting things coming out. I think the Spruce testnet that you guys have kind of pulled together is a really good example of firms that are coming in here to try to be innovative and build new use cases.
I think we'll get into that, but I would just obviously echo, Jason, what you said in terms of like the spectrum. I would say even within banks, within asset managers, within hedge funds, there's even like a spectrum of progressiveness within each of them. And obviously you guys are definitely known to be on the more progressive side of things. Just one anecdote at this point that sometimes I get asked the question, like, how do you convince institutions to use blockchain? And I answer, I don't, because that's not where I focus our time, because at this point there's like enough, I'd say, progressive institutions out there where it's like, these are the people that you are excited to partner with because they're considering these efforts as like a strategic priority and are really kind of driving things from the top. Like they have internal and senior management buy-in, and obviously you guys do have that and fit within that realm. But it's really like, I feel like we've reached maybe not a critical mass, but we're almost there in terms of the leading kind of institutions in the space that are really actually, to use the technical term, doing stuff in this space.
Thanks, Morgan. Yeah, and I can just tell from, you've only joined us maybe, what is it, like a year ago? I think in a few days, it's a year ago. And you've made some really great progress in educating the institution. So this all resonates with me as well. And maybe now diving more into Evergreen and the Spruce testnet. So for those who might have missed it, WisdomTree is one of the key partners for the initial partner cohort that was launched with Spruce testnet. I think this was 2 weeks ago. And Morgan, maybe you can refresh the audience mind and tell us a little bit about what this all is.
Yeah, sure. So Spruce was announced a couple weeks ago, and then a week before that, we announced kind of the launch of Avalanche Evergreen, which are subnets or application-specific blockchains specifically for institutional blockchain deployments. And so what that means is, as an institution, as a more regulated institution, whether buy side or sell side, inherently there are certain kind of considerations that you have to think about when launching, whether an application or a new product. And some of those things revolve around a degree of permissioning or KYC and privacy. And so with the launch of Evergreen Subnets, we were able to basically provide institutions with the best of both worlds. And what I mean by that is the best of both, of being able to benefit from, public blockchain infrastructure development, interoperability and composability, like all of the good things that kind of come with public permissionless chains, with a lot of the considerations that have historically driven institutions to launch on like private DLT, private enterprise chain deployments. And so from an institutional subnet standpoint, there are certain things that kind of come out of the box with an evergreen subnet. So think about things like built-in KYC or KYB or other types of user permissioning, a permission validator set, a custom gas token. And why I mention that in particular also is a lot of banks, a lot of banks and more regulated entities at this point can't hold crypto. And so what a custom gas token allows them to do is create like a valueless gas token to basically power the transactions on their subnet without themselves having to, hold crypto while the regulatory environment's still kind of, unclear. And then also the other thing that I would add is EVM compatibility, which at this point is still kind of top of mind for a lot of these institutions. And so in this way, evergreen subnets basically allow institutions to kind of use them as like a stepping stone away from enterprise deployments into the public domain. From a Spruce standpoint in particular, Spruce is an example of one of these evergreen subnets. So it has this built-in permissioning at the user level, built-in permissioning at the validator level and smart contract deployer level. It has a custom gas token. And we really kind of created this environment to enable, major and traditional buy and sell side institutions to kind of come in and start dipping their toes in terms of what it feels like to be on chain. It has an initial cohort of not only institutional partners, but infrastructure partners in Quadrata, in MetaMask Institutional, in Credo, as well as an initial cohort of applications. So think like Aave, Dexalot, which is a central limit order book, Volts, which is an interest rate swap protocol. So really allowing institutions to kind of come in, dip their toes into into not only what it feels like to be on chain, but to what it feels like to use applications, which I think a lot of them have expressed interest in doing, but have been precluded from doing so because, all of these applications to date have really been launched on public permissionless instances and aren't necessarily fit for purpose in terms of their current deployment. So that was our kind of view in terms of how do we get these institutions to kind of come in and start really testing out the applications to really upgrade like legacy infrastructure, ways of working, and other types of institutional workflows. So, obviously want to hear from Jason and Maredith in terms of how they're planning on kind of engaging, and we can kind of get into that. But at a high level, that's what we've built.
Amazing. Thanks for that breakdown, Morgan. So I think you tackled a lot of questions in your answer already, but I think we can maybe break it down a little bit more in detail. So how do you foresee Spruce testnet help deepen the understanding of some of these applications in financial markets? And this can be for you, Morgan, or for either of you, Jason and Maredith.
Do you guys want me to start?
Yeah, I was going to say, I feel like I talk too much. Maybe Jason can jump in.
You were just super clear, Morgan.
I think at its sort of most basic level is that Morgan alluded to this, like banks, big institutions have a really limited availability to get into this, right? A story that I hear over and over when dealing with institutions, with people that work in the digital assets group, team, division, whatever, for a big institution is that they had to get into it personally to then go and make a pitch internally to start to look at stuff. And that's happened, that story is just repeated throughout the industry, right? And unless you had someone that was so into it that they'd gone out, played with these things, realized the parallel to their existing job, and then went and took some risk to pitch that internally and try to pivot their career, that doesn't happen all the time very organically, right? And so the availability of to think about this testnet as like a sandbox for institutions to go in a safe space and be able to engage with it in a way that means that they're not out there playing with this public stuff. They haven't had to hold any crypto. They don't need to worry about custody and key management, but can start to just get involved in the workflows. I think is going to be a real accelerant for being able to pull people in. So creating that environment that we know is KYC, where all the players are known, that they're counterparties you'd be happy to do business with, already that drops the bar for sort of like both the financial and the reputational risk for a lot of these firms, and hopefully allows them to come and enter, experiment, and eventually grow the space.
I completely agree. I think the KYC aspect of it too is huge, and the three ones that at least we talked about internally, and also started to talk about externally too, is the pure connectivity. There's not a lot of examples of where everything that we talked about to date is about what we're doing internally. This is our first opportunity to test with our peers, which is really exciting. And as if you come from the TradFi space, there's a lot of firm-to-firm transactions, of course. So that's really important to see how that works outside of your own ecosystem and your own home cooking, to be able to test those transactions. The controlled testing, to Jason's point, is huge. This is true research and development, which is really exciting, but with no capital risk, which is also very unique. And I think for us personally here at WisdomTree too, we have this vision of being chain agnostic, and this is a good way for us to really start to test that too, and EVM compatibility as well. So just a few other points to add on to what Jason said, but completely agree.
I think one other thing I would just add is a lot of institutional DeFi today, or permission DeFi, however you want to call it, happens with permissioning at the application level, where you have all these different kind of institutionally focused applications launched on public permissionless chains, but then enforce KYC at the application level. And what happens because of that is you get fragmented liquidity from app to app, and you lose that interoperability and composability among the different applications. And so the other thing that I would just highlight in terms of what this initiative allows us to kind of accomplish is we're able to bring that permissioning down from the application level down to the chain level. And by doing that, and to what Jason was saying, is that you don't necessarily know who in the environment you're trading against, but you know that whoever is in there has been kind of KYC'd or KYB to the same extent that you've been. And so what that does is allows the applications to launch on the subnet without themselves having to change anything in their smart contract logic and launch in their kind of original iteration. And then at the same time, what you're able to maintain is that liquidity across applications, and you're able to maintain that interoperability across applications. So I think we're really excited to kind of see that play out. Frankly, Jason, I would love for you to deploy that DVP app on Spruce, because that's one kind of low hanging fruit use case that I'm really excited to kind of explore and get into. And it's just cool that we can kind of maintain that that innovation that comes with public permissionless chains, but in a way that is fit for purpose for institutions.
Yeah, absolutely, Morgan. I'm all over
it. Great. Thanks so much, Morgan. I think maybe one, and you already covered this, but I think just to make it super, to digest it a little bit for the audience, maybe you can cover some of the potential benefits of some of the trades and applications that people can do on Spruce testnet.
Yeah. So I think with Spruce, we were very, as we kind of went around and worked with our institutional partners, I think to one hand, or to one of the things that Jason was saying, there was a lot of internal governance that we had to kind of partner with our different institutional partners with, in terms of kind of getting through these different layers. And as we kind of went through the journey over the past 10 months, we very much didn't want to be prescriptive in terms of you need to come here and trade this, and you need to use this application. But we wanted to really make it fit for purpose for the institutions to kind of come in and like test out whatever was top of mind for them, and whatever was interesting and of strategic importance for them. And some of the things that we heard in these discussions was, in the first instance, really wanting to test out apps to trade things like FX, to trade things like repo, as well as interest rate swaps, and really kind of focus on the, how would I say it, like the quote unquote safer side of the security spectrum. And then really ramp up from there in terms of exploring different, tokenized funds, alternative investments, and seeing how we can use DeFi applications to just, again, upgrade institutional workflows and legacy infrastructure. So really kind of taking the time to outline, like, end to end, what does this process look like in the Web 2/traditional world? And what does it look like using X application? Are there savings? Are there not savings? Are there efficiencies? What does that look like? As well as giving the applications a chance to hear directly from our institutional partners of, what works, what doesn't work, what potentially needs to be tweaked in order for it to be made fit for purpose. Because obviously, it's great that we've created this testnet environment, but the goal is obviously to kind of ramp up from there and spin off different initiatives in a mainnet iteration. And so it's really like a scaled approach, but in the first instance, again, kind of focusing on those lower hanging fruit type use cases.
Great. Yeah, I'm really excited to see what's to come. Obviously, everybody at home, stay tuned. This is just the beginning. Before we move into public Q&A, one closing question that we like to ask our guests. What are some resources that you like to use to stay up to date on the latest developments in blockchain, in the market, or just in general, Jason and Maredith, outside of listening to Money Moves, of course?
Look, for me personally, I think the best resource that I've found is just talking to people, right? I try to stay connected to as many people working on as many different things as we can, and find out what they're doing. I really try to look for the signal that's, not just into it, but if I can find smart people that are building clever things, then, that's what I want to know about.
I agree with that. I also think, there's so many great podcasts and so many great resources out there too. But we also have a bunch of our own for just basic education as well. So definitely check those out too.
Amazing. Okay, so I think we're ready for public Q&A, Kyle.
Yeah, amazing. Thank you both for joining us. We're going to we have a couple minutes here, so we just wanted to open up if there was a question or two from the audience. Go ahead and hit that mic button on the bottom, and you can request up to be a speaker. Anybody have any questions for Jason or Maredith here, or Social and Morgan as well? But we want to make sure that we're keeping everything on topic and making sure that we honor the time of our special guests here. So I know there was a lot covered here, and there's a lot of really great things to learn. But if anybody has any specific questions they wanted to ask our guests here, feel free to jump on up here. But in the meantime, while we wait, just wanted to kind of open it up to our guests if there's any other thoughts that you weren't able to share or questions we weren't able to get to here, while we see if there's any special or any questions from the audience here. So for Jason or Maredith, anything else that you wanted to share about anything that's coming up or any topics that we didn't get to today?
Or actually, one question that I think would be interesting for you guys, Jason and Meredith, is I know we just came back from a week at Consensus. Like, anything that came out of there from like a takeaway standpoint that surprised you, that you're excited by, would be kind of curious to hear your take on that.
From my perspective, it was great to see so many people still building, even in this so-called crypto winter. So I left really excited about the possibilities, and I saw a few people adding me about real-world tokenization. It's definitely here and happening, and now it's talking about distribution and what that looks like, and that's where the Spruce testnet is going to be a part of that, and then also just other platforms. So I left excited, tired. It was a long whatever it was, 96 hours, but definitely excited.
Yeah, I always find it really interesting at those things to observe the kind of mix of people that are there. I think there was definitely a different vibe this year than what we saw last year at Consensus. Like last year, like candidly, it felt really frothy. The number of yield farming startups whose marketing budget was something absurd that were floating around and crowding the conference out last year felt very hypey. This year, it felt much more buttoned down. It felt much more like it was like the serious players that were going to stick around. You could also observably see a lot of like the professional services starting to enter the space by who was there. So like accountancy firms and consultants and their traditional financial service providers. I haven't seen that before at these conferences. So it's interesting to see like how that makeup of it is changing, and I think that does sort of indicate where we are in the cycle versus last year, which I think is interesting.
Awesome. Thanks for that, Jason. So we have Nathan. You're up. We got a question here from the audience.
Yeah. Can you guys hear me? Okay.
Yep, definitely.
Beautiful. First of all, thanks for doing this, guys. Really, really interesting stuff. I saw in the announcement that there's also a couple other institutions participating in Spruce. T. Rowe Price, Wellington, Cumberland. It looks like, and there was mention of like a part of the reason is to test with peers. I was just curious if you could talk a little bit more about like your relationship with the other institutions and like making the decision to participate, and kind of how that maybe how that coordination looks now and how it might look, as you ramp up the effort.
Sure, I'm happy to take that one. So just to take a step back, so I run institutional business development at Ava Labs, and the mandate is very much to kind of work with different types of institutions as they build on or use Avalanche as a blockchain platform. And so in my role, it's really a sense of like partnering with these institutions, whether they're buy side or sell side, along their like blockchain/digital asset journeys. Just depending on kind of where they are and what they're focused on, will dictate the nature of that partnership and what that looks like. And I think part of the reason, and obviously don't want to speak for Jason and Meredith, but I think part of the reason that we've been able to kind of onboard these various institutions in terms of Spruce and just more broadly Avalanche is I think a lot of us, whether me, our head of DeFi, our president, John Wu, who was on the line earlier, a lot of us kind of come from the traditional financial services space. And for lack of a better term, like we get it. We understand what it's like to kind of navigate within these large institutions, and we understand kind of how to toe the line in both worlds and speak both languages. And so I think over time, like I like to say that we kind of pride ourselves in becoming trusted advisors to a lot of these institutions as they navigate these journeys and try to figure out how to operationalize some of these use cases. And so all that's to say, like, this was very much not an overnight effort by any means. I think we've been kind of speaking with a lot of these institutions for, over 10 months. And it's really been working with them to figure out how do we make you guys comfortable? How do you guys get comfortable with these various use cases and with using the chain? What are some things that kind of come up on your sides that we can help, address and advise on? And so it's definitely like a back and forth collaborative effort and partnership to kind of get to this spot. But I think a lot of the success that we've had so far has really been because we've transitioned from that world and kind of can toe the line in both.
And I'd add from the business side that definitely, and we talked about this before, but onboarding and KYC was really important, as well as the valueless token, so the no capital risk. So Morgan created a path, and the Spruce testnet did for us to more easily sign on than if there was some sort of capital requirement, which has been very helpful.
Awesome. Yeah, Nate, thanks for coming up, and hopefully that. Did you have any other follow up to that question?
Nope.
Wanted to make
No,
sure
I was just going to say thanks for the answers, guys.
Absolutely. Thank you for coming up and for supporting and joining our conversation today. Okay, it looks like we are wrapping up here. We don't have any other questions coming up, so yeah, if we want to just take it away with any final thoughts from our guests or from our Ava Labs teammates here, and then we can wrap things up.
Just really appreciate you, Jason and Meredith, for coming on. And Morgan, again, has been incredible to work with you on this initiative. And, we're definitely going to have you both back.
We'd love to join.
You guys are just too good. We're going to have you back on as a recurring guest. So
love it. And we'll do cocktails next time. We'll do a happy hour.
Yeah.
Exactly. Yeah, I would echo Coach's sentiment. Really appreciate you guys hopping on, and obviously really appreciate your partnership, and look forward to continuing to work with you guys.
Thank you so much. This was great.
It was awesome, guys. Thanks very much for having us.
Yes, thank you for joining us. We will have a recording of the spaces up here after Summit on our YouTube channel, so stay tuned for that. Thank you to our special guests for joining. Thanks, Morgan and Soj, for walking us through it. And we will catch you all next time. Stay tuned for an announcement on the next episode of Money Moves.